Hi everyone, welcome to the Buffett and Beyond Saturday Stock Market Recap for February 1st, 2025, the beginning of the second month of the year. And remember folks, if you want to live on this beach like Jimmy Buffett used to, then you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market fell hard on Monday, then spent the rest of the week trying to catch up what it lost. And it was doing just fine until the news of tariffs on China, Mexico, and Canada became official on Friday afternoon. So the market then, which had a wonderful, wonderful rally going, fell very, very hard. So we'll have to wait and see what happens on Monday. And then, of course, we had a plane crash after the market closed in Philadelphia. So we've got these string of airplane crashes that are affecting the market. And we'll just have to see what happens, folks, and our prayers go out to them. Back to our weekly stock analysis video. Rather than going over one particular stock, we discuss how we form our 30 growth stock portfolio. Now, we have a 22-year history on this portfolio, and our goal is to find a few stocks which grow faster than the S&P. Well, that's the goal of every money manager out there, and at 96% of them who trade the publicly traded mutual funds cannot outperform the S&P. So we have this portfolio that's been outperforming for 22 years, not every year, but just about 2.5 times what the market has returned on a compounded basis over this 22 years. But we want to find stocks to dampen the volatility of the portfolio, and we find stocks that grow faster than the S&P 500, but when we get into the anticipation of a recession, we want stocks that go up when the market goes down, and we show charts in that, folks, in that weekly stock analysis video, so you've got to watch that. And yeah, it's a neat trick if you know how to achieve this objective. And our ETF video, well, we have our favorite best stocks of the QQQ ETF, 13 of them so this year, and almost doubling the returns of the overall market for 2025. And we are only 1 month into this new year, so we've got something going for us, folks. And let's see what the market did. Well, over here we can see the market went up to the top and closed above the top band, which means it's going to fall down or take a little break and then try to break to that new high once again, or at least test it. And then Monday, we got news of a new AI system coming out of China, less expensive than the ones that we're making here in the U.S., even though they're using U.S. chips from the NVIDIA, and the market took a bad tumble in here and then spent the rest of the week trying to go up, and it was almost making it over above that 6,100 level, and then fell when the news came out Friday afternoon of the tariffs going into effect today on Saturday. And you can see the market had gone all the way up above 6,100 and came down, and it closed right here where you could see this little nub off to the right. So lost all of that steam in there. And boy, oh boy, we're going to have to see what happens on Monday. Now, this past week was the last week of the month, and usually it has a decline, and then it has an upward bias. And boy, that decline just scared everybody, didn't it? Yeah, it sure did. And then spent the rest of the week going up and then coming back down, pretty much starting where it left off sometime in the middle of last week. So we haven't gained anything. A lot of ups, a lot of downs. You could have gone to sleep this past week and you really wouldn't have missed anything. But down here we see this blue line starting to level out, and this is the MACD, moving average convergence divergence. And if this blue line turns down, and we didn't expect that on Monday and Tuesday because that's first trading days of the month or when the pension plan money comes into the market. The problem is we had that airplane crash out of Philadelphia, and we don't know what's happening as the news is coming out now, and we'll see. So maybe Monday and Tuesday might not be good days, especially with the tariffs coming on today as we speak, actually. So if this blue line crosses down over this, that's a sell signal. We really don't want to see that. But as we said, the first couple of trading days are usually good days for the market as new money comes into it. But then after that, it takes a break. So the question is this market going to go back up and test these old highs? And let's go right into portfolio protection. And this is protection about 12.5 to 15% below the market, and this is getting very popular. We've been using it for 40 years now, but it's a system where you buy puts about 12 to 15% below the market. You spread them out. This is about a $150,000 portfolio, so you spread them out for 3 months. So you're always trading in this particular, February 21st is when this put expires, and we'll go out into May, right around the time that this expires, and we'll go out. So we always have 3 puts for this particular portfolio in place. Now, the question is, where do we get the money to put on the put protection, because that costs money? And this is from the professional subscription that we have, where only licensed money managers can sign up for. And it's a new subscription. We haven't talked about it for much. I shouldn't say it's a new subscription. It's been out for quite a while, but we just haven't talked about it. So where do we get the money to pay for that put protection? Well, Netflix is in our portfolio, and we saw a big jump in the stock. Let's go there. So here's Netflix, and it was in a decline, and it's in our stock. So we have the stock. And then it went up, and it came into here, and all of a sudden news came in, and this stock jumped, but it came back down and closed. There's that nub where it closes, right in there. But look how high it had gone up. And so we still don't do anything with it. And then all of a sudden the next day it just gapped up and went up almost to 1,000. And usually when a stock does that, we wait 1 day to see if it's going to continue or if it's going to back off a little bit. In this case, it backed off. That's when we take action. In other words, the news is out, the stock did what it's going to do, the market, whoever the market buyers were, did all their buying. And usually when a stock does this, we look at it and we say, okay, we're going to sell covered calls on it. So we sold covered calls on it. Let's go back. We sold a 1 week covered calls. We don't want to stay there too long because either the stock drops or keeps going back up. We also initiated a deep in the money spread, and we brought in about $800, which is enough for the next quarter of buying puts. So in other words, we can buy in our particular portfolio of 150,000. We have enough money to buy puts over the next 3 months. So in other words, this is where we are right now. We made enough money to buy the May, June, and July puts when that comes through. And where we're going with this is that you only have to do things like this once a quarter to find a good return. Now, we sold some calls, covered calls in the portfolio on Friday because we saw this market going up again, and we said, okay, we could sell some covered calls, and we looked at the charts on the stock, and that goes out to our professional money managers, and we say we're selling these covered calls. So not only are we making enough money to go all the way out to the summer buying the puts 12.5 to 15% below the market in case of some kind, that's disaster insurance, so you can sleep and you don't have to worry about the ups and downs of the daily market. And by selling some covered calls, we make enough for the portfolio manager's fees. So in other words, a portfolio manager can tell his client, look, if you want to be insured, we can generate enough money to pay for the puts and also hopefully to pay for the money manager's fees. So a client can say, what do I have to lose? Let me go with this money manager. This is why the professional subscription only goes out to money managers, because they don't want to be in competition with their clients. So therefore, What we're doing is going toward money managers who find this system very, very nice. And we've been in effect actually 2 years now, and that money manager is doing very well and helping to pay for their fees. In fact, have paid their fees over the past 2 years, plus gotten enough money to pay for those puts. So, folks, now that you know where we're going and what we're doing, waiting for this week, it's going to be a very exciting week with all the news about the plane crashes and how the tariffs are working. And yes, we are very hopeful for the market, but what's going to come next week, we're just not sure. So therefore, we'll take it easy. Most we'll do is sell some cover calls, which I told you, and will expire next Friday. So we're going to go out with a clear head. We made money this week that we were able to put in our pocket with the spread and the covered call, and we're just going to go out and have a good time walking on the beach and being with our family, maybe having Sunday dinner with our loved ones. And folks, you go out, clear your heads, and most of all, be safe. And folks, we'll see you back here in a couple of days.